as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. It's a strong start to the trading week. The Nifty heads towards the 10,400 mark. PSU banks lead the index higher. HDFC beats street estimates in the second quarter. Asset quality parameters remain stable. A one-time loss leads to UPL missing analyst estimates in the second quarter. IDFC and Shriram Capital are set to call off merger plans after the two sides failed to arrive at an acceptable valuation. That's a Bloomberg News report. And Lupin, Bharti Infratel and Tata Steel are the other Nifty companies reporting their earnings later today.
Yeah, UPL has just come out and Lupin should be coming out over the course of the next half an hour, 45 minutes. So that's something that we are watching out for. But what's the index done? Pretty good actually. You would be happy with such a chart because even though it doesn't have too many variations, which is also welcome by the way, but the fact that we've stayed up for about 0.5% for most part of the trading day today, it's a pretty good thing. Narrow range, a single channel, but up about 0.5%. The broader markets too, doing reasonably well. The Nifty bank giving support, all of that, leading to the markets and the market breadth looking reasonably okay. Should come up on your screen. The mid caps and the small caps, as well as what's happened to the market breadth, all of that is positive. And then we'll get the Nifty heat map going. I think dominated today by what's happened to oil and gas. And okay, yeah, it's a small gradual arrival for the Nifty heat map. But here's what's happening. There is strength in ONGC, BPCL. I was talking about oil and gas doing really well for themselves. Yes Bank has bounced back after the disappointment of the results week, so that's okay. And Bharti Airtel, Bharti Infratel more importantly, up about 2.5%, but Bharti Airtel somewhere there, right on your screen, at about 1.28%. That's not doing too badly. And not too many losers, I think that's the key thing. HCL Tech down another 2%. ITC, the top drag in terms of weightage. And to an extent, other IT names like Wipro, etc. are giving it company, but not too many losers, which is actually a really good thing. But it's dominated by trade in the broader end of the spectrum. Oil and gas, select PSU banks. I think Pradeep has the lowdown there. Pradeep, the market breadth too is positive.
Definitely, and if you look at it, the PSU banks, as you talked about, are in focus today. There's a long list, but I'll mention just two: Union Bank and OBC. These are two stocks that you should really watch out for. In fact, a good number of shares like IDBI, Syndicate, they all have moved up with good volume. Other than PSU banks, what's buzzing is PI Industries. The stock actually corrected last week, if you remember, after the results, but now it has moved back. And in fact, it's a breakout of sorts. I think the stock is quoting at around 3 to 4 months high in today's trade. Jet Airways is another key performer, and if you look at the movement in Jet Airways, stock has gained 8% today. Over last 1 week or so, this stock has gained around 20%. So this is clearly an outperformer. Some cost cutting is what is being reported in media. HEG and Graphite, the duo is once again in motion. HEG up 9.5%. Graphite is logged at 5% upper circuit. And also, Bata India is a stock that is really buzzing in today's trade with good volume, maybe because of some more action on the IPO side in the industry, which is kind of driving the traders towards this stock. Bata India, a key gainer today, up 4.25%, roughly 30 rupees in today's trade. Navneet?
All right, so those were a couple of stocks from the broader end of the market, but let's also take a look at what are the trends in the futures and options space. Well, clearly, bulls have taken charge of this market. Nifty is staring at the 10,400 mark. We're still trading at all-time high levels when it comes to Nifty, but Bank Nifty is yet to touch its all-time high levels of 25,198.8, which was seen in the month of August. But nevertheless, Bank Nifty is still trading above the 25,000 mark, which is a crucial thing. Overall, if you look at the India Volatility Index, since the morning session, it has been trading with a positive bias. Now, this is just a word of caution. This indicates that there could be some sort of near-term correction which could come, and India VIX currently trading comfortably below the 12 mark. Remember, majority of your derivatives analysts look out for that mark of 12.5 on India VIX. The trends so far, they look bullish, because if you look at the put side, there has been aggressive writing which has come in for various put strikes starting from 10,000, 10,001, and it is the 10,300 strike where major writing of almost 8 lakh shares have been added so far. If you go by the premium there, which is about 100 right now, on Friday closing, it was almost 113. So the traders who are writing this put, it tells you that the near-term support for the market could come in at about 10,200 mark, because if index falls to those levels, the put writers will still be safe. Otherwise, the 10,400 call so far has seen just about 4 to 5 lakh shares of open interest addition. I just want to highlight few stocks here. There has been both price action as well as open interest build-up for the likes of Jet Airways. You also look at stocks like Just Dial and United Breweries. That's a counter which has been on a tear for the last 7 to 8 trading sessions. All these stocks on the futures and options side have seen fresh long positions coming about so far. ITC, as Neeraj was mentioning, it is the biggest laggard on the index. The earnings were not so good. The counter is down, and we've seen some sort of fresh build-up coming about. And HCL Technologies, it's down for the 5th straight session. And if you go by what the activity is there on the futures side, which is telling you the traders still continue to take fresh short positions on HCL Technologies, which is down almost 2% in trade, Neeraj.
Yeah, well, a bunch of stocks out there. But aviation is the interesting one. However, let's talk about what happens over the course of the next few days and weeks. Rahul Arora, CEO for Institutional Equities at Nirmal Bang Securities, joins us right now on the show. Rahul, pleasure having you. Thanks much for joining in. Bit of a spur in the market today. The Nifty Bank is supportive too. PSU banks are bouncing back. What's been the house take on what this PSU Bank recap means predominantly for the PSU banking names? I think that would have a bearing on how the Nifty Bank does over the near term as well.
Well, Neeraj, at our house, we still have a larger tilt towards the private sector retail-oriented banks. I think the move has come as a definite shot in the arm to the public sector banks. And you saw that last week when a lot of these banks were up anywhere between 30 to 50%. But interestingly, at least at our desk, we haven't seen too much of incremental follow-up buying after that day. In fact, we have seen that a lot of institutions have come in for profit booking. So I think the follow-up buying that you're probably seeing today is just because some of these stocks towards the back end of the last week corrected a little bit, and some people who were not able to get in on the day that these stocks actually rallied. I think the specifics on how the financing of these bonds is going to take place is very crucial. Which bank gets how much, what are going to be the terms of this recapitalization. And I think, Neeraj, I'm not entirely sure if this does away with the entire pain in the system as far as NPAs are concerned, even though there will be, it's basically a cash neutral transaction between the government and the public sector banks. So I think when we talk to a lot of institutional investors, they're still awaiting to hear more specifics on this before they take a bigger call. So a definite shot in the arm, but does this dramatically change the fate of the asset quality numbers that will be declared over the next few quarters? I'm not entirely sure about that, and neither are our clients. So that's why I think you're not seeing a runaway rally. You saw a rally on one day, you saw a bit of a pause, and I think that pause is sort of important too. But I think if you're looking to play the Bank Nifty, and I think the Bank Nifty going up even from here, our tilt will still be towards private sector retail-oriented banks.
There were some results on your screens. Kajaria Ceramics is one, wherein it's been well, a ho-hum quarter, so to say, 6 or 7% net sales uptick, I would presume, from the looks of it. The bottom line numbers just about okay. IFB Industries is the other one, which is an interesting quarter. I just have the net profit number, don't have the sales numbers as of now in IFB, but the stock is certainly got a bit excited when those, okay, the sales numbers also pretty good, about a 35% odd uptick in revenue. and the bottom line has doubled for IFB. So it's a good quarter really for IFB Industries. Rahul, a quick thought really on some of these durable companies. I'm not going to the ceramics, but the durables, whatever little you've seen of the companies coming out with numbers, how do you think this quarter and the next quarter, considering the festive season got extended over 2 months, could turn out for some of these? The IFBs, the Voltases, the Symphonies of the world.
Well, Neeraj, it's actually a space we really like, Neeraj. I just heard you talk about Kajaria Ceramics results. We were actually covering that stock till very recently, till we had an attrition on the analyst. But I think it's been a multi-bagger for us as a stock under coverage. But I think anything that has to do with the theme of housing for all at the mid-income to lower levels is a theme that we really like. So anything to do with durables or consumer electricals, names like Crompton Consumer, Whirlpool, where I think earnings could easily compound by 20-25% over the next 2 to 3 years. These companies are coming to you with return ratios in excess of 30%, no debt on the books. Fixed asset turns, for example, in the case of Crompton Consumer, are as high as 15 to 17 times. You look at a Whirlpool that has about 2,000 crores cash on books. So when you have these kind of financial metrics, Neeraj, I don't think you are too fussed about paying 30, 32 times when a lot of the market is trading north of 40, 45 times. Even in electricals, for example, we do like names like V-Guard. We've been very positive on it for quite some time, even though the valuations look a little stretched in the near term, but I think it's a good structural story to be playing. Even a recent listing like a Dixon Technologies, which is basically a back-end provider or an outsourced model to a lot of these frontline OEMs, that could be a very interesting play, even though it's had a dramatic listing. But I think, if you look at the EMS and the ODM market globally, Dixon Technologies is something that could grow into something really big. So I think anything that has to do with housing at the mid or lower income level, like I said, is something that we're really positive on, and we have a buy recommendation on a lot of these stocks that I've spoken about.
Reliance Home numbers are also very interesting. If you look at it, revenue at 389 crore versus 258. Although these the base numbers are actually pro forma numbers because the stock got listed only over last quarter. But net profit at 41 crore versus 20 crore. It really looks interesting. But Rahul, how would you really look at it? Because this is the first time we have the standalone number for Reliance Home.
Well, actually, this is not a space that we're tracking too closely, to be very honest. So I'm afraid I'll have to skip that one.
All right, just want to highlight, if you could just pull up Kajaria Ceramics, the margins for the quarter have actually contracted. It's come in somewhere about 17 versus 20, which was seen in the corresponding quarter. And that's the reason why the stock has, its off days high, still pretty much holding in the green territory with gains of 0.5%. So Kajaria Ceramics, not a good quarter when it comes to the operating performance. The other pocket which is doing well is the realty space. The Nifty Realty Index is now the top sectoral gainer. It's up almost 1.8%. You look at stocks like Indiabulls Real Estate, HTIL, Godrej Properties too is trading with gains of almost 2.5%. Let's just also pull up a Gayatri project. It's not a part of the Nifty Realty Index, but that stock's also seen good gains coming about today. Gayatri project, actually its off days high. It's still trading with gains of 1.5%. Rahul, anything in the realty pocket that you like?
Well, actually, to be honest, we actually have an underweight stance on the sector. But I think once this entire issue of demonetization, GST and RERA plays itself out over the next year and a half, I think the stronger players in the sector will come out much stronger. And by that, I mean names like Oberoi Developers, Shobha, Godrej Properties. But for the moment, I think for the next 3 to 4 quarters, I think with the way things are on the ground in terms of new launches and sales, I think even in the results that we have seen from Oberoi, for example, I think it will be a bit soft. I think the entire way people are looking to value these companies is changing. So if you have a 1-year horizon, I don't think these stocks will give you too much of an upside from here, to be very honest, especially at a time when inflation is inching up and people are sort of veering to the fact that interest rates may have bottomed out. But I think once this sort of triathlon of RERA, GST and demonetization plays itself out over the next year or so, I think the stronger players might come out a lot stronger. So if you get substantial dips from here, say about 6 months from now, may be a good entry point. But right away, I wouldn't be rushing in to buy any of these names.
Do you like aviation as a space?
Well, it's not a very vast sector in terms of stocks under coverage, to be very honest. And I think both in terms of regulation and crude, it is a very tricky call to be playing on a day-to-day basis. But I think if you had to play anything in that sector, to be very honest, I would just stick with the industry leader, which is Indigo, which is holding on to, if not gaining market share. The only thing that bothers me right now is that Brent is back up to $60 to the barrel. So I think I like the Indigo model, which is the sale and leaseback model. I think I like the way they handle their costs. But I think given the fact that it's such a regulated sector right now and the fact that crude is inching up again, I'm not sure if I want to be a buyer in this space right away. But if investors must, in the limited options that you have, I think Indigo is probably the safest bet to play.
Some results on your screen. It's thick and fast. This is a good day for results, some of these which are coming out right now. I'm presuming this is Navbharat Ventures, and that stock has come out with good numbers, a bit of a spike there. But yeah, revenues as well as bottom line numbers looking fairly solid. We're doing a small study, Rahul, on consumers today, staples versus discretionary. And while discretionary probably came out at the better end for the quarter, the valuations, if anything, seem extremely expensive. I don't know if you have a bull call there, but if you do, I would be asking you, how is it that you can justify 47, 48 times FY19 earnings?
Well, Neeraj, to be honest, I think if you look at, let's take Whirlpool, I mean, if you would consider that as a durable, and let's stack it up against something like a Hindustan Unilever, which will be classified as a staple. If you look at Whirlpool's price to earnings multiple, it's hovering at somewhere around 35 times. Hindustan Unilever, though we have a buy on it, on the other hand, is trading at close to 40 to 43 times. So I don't think staples are coming to you all that cheap at this point in time. I think it's a case-to-case basis. I mean, you look at something like an Emami, which is a pure play domestic, with a limited international exposure. But even Emami is coming to you at close to about 37, 38 times. So I don't think staples are that expensive. The only reason I'm a little more excited about durables, Neeraj, is that when we look around, whether you look at a Britannia or a Nestle or a Maruti, which you could sort of quantify autos as FMCG as well, this trend of premiumization is very evident when you're looking at the numbers, when you're looking at things happening on the ground. I think because rural India took a little bit of a hit because of demonetization and GST, I think the volume growth in consumer staples has come down, and in that backdrop, probably the valuations look a little stretched. But I think the growth rates that you'll see in durables, and this could even include multiplexes for that matter. I mean, we recently met the management of Inox, and they were telling us that the Insignia platform is doing very well for them. So I think this premiumization story across the board is playing out pretty well. Mercedes had a record year last year in terms of sales in India. But if you stack them up in terms of valuations, I don't think there's too much of a mismatch over there, to be very honest. Gillette has hit a new 52-week high today. So that's another story that you're playing in terms of premiumization. So I think, I'm a huge consumer bull in India. It's the only structural story that you have. It's not capex related. These companies have nothing to do with debt. They have nothing to do with US FDA. They have very little to do with interest rates. So you may have a little bit of volume fluctuation here or there, but the operating leverage, Neeraj, can be huge, especially with the way they play around with their advertising spending. So even if I was to play a slight premium for them, at least I'm concerned, my concerns are not the same as they would be in a lot of the other sectors. These are all companies with return ratios in excess of 25-30%, going all the way up to 70-80%, debt-free. So I have a lot more comfort. I'd probably sleep a lot better at night owning a consumer name, even if there was a bit of short-term pain as compared to some of the other names.
Rahul, just stay on. There are some numbers. An index stock which is coming out with numbers, or has come out with numbers, Lupin. Okay, do we have the numbers on the screen? Yes, we do.
455 crore is the net profit versus estimate of 444. So marginally better than expectation so far as your profit number is concerned. That's one number I have got.
Well, I think that's the one number that all of us have. Okay, the revenue numbers are out. 3950 crores versus our estimates of 4055. So I would presume these are pretty much in line with estimates, the numbers. The stock has moved up a bit. I don't know if you're missing something, but from the looks of it,
income of 74 crore rupees.
But again, tiny, I think, on that base. But if the consolidated revenue at 3950 crores versus our expectation of 4055, don't think there is any deviation there. The stock is certainly moving up. We'll get an analyst as well. But Rahul, I'm throwing this out of the dark at you. I don't know if you really have coverage on Lupin, and if you personally have looked at Lupin and the estimates thereof. I'm sure Darshan will join us in moments from now. But here are the numbers: 3950 versus the Bloomberg estimate of 4055. This is consolidated revenue, and the consolidated PAT is at 455 crores versus the Bloomberg estimate of 443 crores. A marginal uptick or a marginal beat compared to estimates. Any thoughts here, Rahul?
Well, Neeraj, actually, it's a stock that we are currently in the process of initiating, so I won't be able to comment specifically on Lupin, but it's a space that we are very positive on is pharmaceuticals as a whole, given the growth valuation dilemma that exists between the two. So Lupin, unfortunately, specifically, since it's a stock that we're in the process of initiating, I won't be able to comment, but like I said, pharmaceuticals, I mean, we love names like Dr. Reddy's, Cipla, even in mid caps, we like names like Indoco, Dishman. I think it's a fantastic space, Aurobindo Pharma, where the growth mismatch to valuations is stupendous, which is something that IT doesn't have, and the valuations are very similar. So I'd actually be a buyer in pharmaceutical stocks. Specifically on Lupin, I would reserve my comment at this point.
Thanks much for taking the time out and joining us and giving us your perspective. Look forward to have you more often on this forum. Well, that's Lupin, and that was up 5%. Now, I would presume, and Darshan will probably throw more light on it. I don't know if Navneet and Pradeep have other thoughts, but the stock would probably be up either because there's something else that is there in the numbers, or that the market was anticipating numbers which would have been worse off than estimates. Typically, the market starts pricing in what the quarter could be like, irrespective of what the quarterly consensus estimates would be, and then the numbers are in line. The bottom line numbers is marginally better than estimates. I can think of no other reason why there should be such a sharp reaction to what has been largely an inline quarter. But maybe Darshan has some more thoughts here. Darshan, why this sudden uptick?
The sudden uptick is simply because the market expected too little from Lupin. The market murmurs were, a big miss that could come in. So basically, it's the power of short covering that you're seeing on Lupin at this point of time. Numbers, they aren't the best at this point of time. We were anticipating 4,000 crores of top line. They've come in at 3,950. So the top line is in line with what we had anticipated. Revenues at 455 crores. We were expecting 443 crores. EBITDA also 850 versus 870. Margins have come in at 21.5%. So it's to the textbook inline set of numbers that's coming from Lupin. But simply put, we don't have the details as far as, what the breakup for the US market is, what has happened. But simply there were so many short positions that were being built on Lupin ahead of the numbers. Even you're looking at it, the top line, that is, the numbers are aided by very high other income, 74 crores versus 21%. So there's nothing exceptional about Lupin's number, just the point that the street had anticipated too little from Lupin this time around, and they managed to come with numbers which are in line. I'll come back when the press release comes out, when they will give a much detailed description in terms of, what the US markets did, what the Indian markets did. But till that time, this is the only numbers we have. So it's basically, the street anticipated too poor, and they came out with an inline set of numbers. So short covering is seen in the counter.
Sure, Darshan. We'll wait and watch out for that regional breakup, which is very crucial. We'll get to know how the US side of the business performed. Remember, there were pricing pressures which were there in the second quarter as well for all the pharma companies. And this is the counter which is down almost 30% on Y-to-D basis. As Darshan was saying, maybe there was some short buildup, but let me also tell you, this is in terms of PE multiples among all the stocks in the pharma sector, this is the cheapest stock which is available. But let us get some expert view from Cinderella Carvalho of Dolat Capital, who's joining us now. Hi, Cinderella. Thanks a lot for joining us. What did you make of the numbers which have come from Lupin so far? It has been in line. There is another income of almost 74 crores. What is your reading of the numbers?
Yeah. Even I'm just looking at the numbers right now. So numbers are slightly better than what we had expected, and probably because of the other income. Even I can see the US numbers now, which is around, and that we were expecting around 22%. So there is a slight dip, but the India numbers are showing robust growth. So I guess that is what is taking care of the overall numbers. So I think the margins have slightly come better than our expectation, and largely because of the India numbers is what I can make out right now from these numbers.
What are key questions in your mind, really, Cinderella, where you would like management to kind of give clarification? Some statements that have come out in media so far, I'll tell you, the MD has commented that company on track with complex generic pipeline, And also, there is a comment from management saying pricing pressure in US business as per expectations. What are you really going to look for in management commentary?
I look forward clearly towards the Goa status of the brand. And I guess we expect it to stabilize. And Q1, Q2, look at the numbers. If they come out to be stabilized, that will be another good indication to look at. So overall, yes, we are looking at a little positive commentary coming up.
There is further comment that North America sales have come at 1,360 crore rupees versus roughly 2,000 crore rupees. So there is clearly a decline of almost a third in North America business, Navneet.
Sure, and then I'll just go through the regional breakup. Pradeep's already spoken about North America. On year-on-year basis, that's down almost 32%, and that's for the formulation side of the business. India is up 16%, APAC up 15%, EMEA up 17%, and LATAM is up 41%. Cinderella, what are you making of the formulation side of the business, where I've just highlighted the regional breakup? North America down 32%, India up 16%, and LATAM has registered good growth of almost 41% on year-on-year basis.
Yeah, that's what I just highlighted to you, that I think the other numbers have done much better. Even India number is quite good, and that is what has taken the margin slightly better than our expectations. And that's what, whereas the US number, I was building in around 22% dip, it has come at around 32% dip. So that's what we'll have to figure out exactly where things are going in terms of US business. Rest all business are looking fairly good.
Sure. What's your house call on the stock, Lupin? Would you look to revise any estimates here?
Yeah, maybe slight revisions may be required, but I think overall the house call will remain to add on bit.
Okay, we leave it at that. Thanks a lot for that, Cinderella. The stock is doing well, as we said, arguably on the fact that the murmurs on the street had started factoring in a big miss, and that hasn't happened. 4.5% or 5% higher for Lupin in trade. We'll get in technical experts on the show as well a bit later on to talk about Lupin predominantly, because that's now probably, if I'm not wrong, the best performing stock on the index currently. It's overtaken, I think, ONGC and the Yes Banks of the world. So really good going for Lupin in the last few minutes of trade. Yes, it's the top gainer on the Nifty, followed by Yes Bank as well as Tata Motors. However, since we're talking about earnings, 5.5% now up for Lupin. But since we're talking about earnings, a quick perspective from AU Small Finance Bank. And Shraddha's here to take us through the results interaction. Shraddha, over to you.
Thank you, Neeraj. Mr. Agarwal, could you give us a breakup of the AUMX in this quarter and any sort of a guidance that you can share for AUM growth in FY18?
AUM as of 30th September is around 12,000 crore plus, out of which 85% odd, maybe around 10,000 crore plus is retail asset, and rest 15% is our wholesale asset. And our retail asset majority is from vehicle finance, which is nearly 45%. Then we have SBL secured business loan, which is divided into two parts. One is your SBL MSME and SBL SME. So 90% of our SBL comes from MSME only. So this is a broad three, and in wholesale we do business banking, we do real estate group, we do have NBFC funding. So all put together we have around 7-8 kind of asset classes, and we are growing by nearly 30% from last year number. Our AUM has gone up by 30% from last year number. So, and you know, everybody knows that this is actually a transition year for us from an NBFC to bank. So we actually worked only 4 to 5, maybe nearly 4 to 5 months. You know, 1 month actually gone into this transition, settling down, settling the team, technology, people, environment, you know, etc. So this is all about our numbers, right?
So is there any number that you can share with respect to the AUM growth guidance for FY18?
We have grown ourselves by 30%. in first 6 months year on year, and I believe that this number will have certain upside, and we can actually target around 35%. And you have to give me some levy around 5% here and there, because as you know, we are in one of the most testing time of environment and the economy. So to give a guidance for a specific guidance or a guidance which has some, a specific number around it is so difficult. But I believe that AU will grow by 35% with 5% levy here and there.
Also, the disbursements in the SME segment grew at a slower 8%. Was there any conscious restricted lending as far as this segment is concerned post GST?
As we all know that real estate is under tremendous pressure, and for us SME means anything above 50 lakh of a loan, right? And so it's not only a conscious decision. I think market is also dried up, and we have become a little bit cautious because real estate pricing is not able to get its ground, where it will fall down and what price we can expect it to get settled. So in this scenario, it's difficult to build an asset around those kind of valuation. So it's both way. We have taken a cautious call, and market is also dried up.
All right, thank you very much for speaking with Bloomberg with Mr. Agarwal. So 30% growth in AUM expected as far as the second half of the financial year is concerned as well. Back to you guys at the studio.
Thanks a lot for that, Shraddha. I'm looking at stocks which are doing well, and I think one name that stands out is PI Industries. Its intraday move on PI has been rather strong, and that's probably because the conference call of PI Industries was pretty positive. I think they maintained the guidance of 10% sales growth and flat margins for FY18. But what this means is that they've had a 21% PAT decline in the first half, and that would get reversed in the second half with sales growth as well as EBITDA margin expansion. So if that indeed were to happen, then maybe the worst is getting priced into PI. Too early to say that, but I think the conference call, the management sounded pretty positive, and that's leading to this stock doing what it is doing right now, 8.5% up in trade. Lots of stocks to talk about. Sharmila Joshi joining in. Sharmila, any thoughts on PI? Let's start off with that since I'm talking about that.
Well, I get a feeling that all the pipe makers sort of have been doing well. And I think that has something to do with crude prices. Once crude prices start moving up, you see a lot of them, and the orders sort of pretty much get distributed because all of them make pipes of different diameters, so they're not directly competing in that sense. Yeah. So I think a whole host of these, sort of pipe makers have been going up. I think Maharashtra Seamless, PI Industries, a whole host of them I think have seen good buying in this last month or so. So I don't know specifically about PI Industries, but I think that entire sector has begun to look good.
Okay. PI is doing very well in the session today. Lupin is doing extremely well. Lupin is saying that EBITDA growth has been fueled by cost control. I think that's been a standard. 7.5% for Lupin. This is one big move. I know Pradeep Pandya is waiting by a chart as well, but just look at Lupin. 7.5%. This is a big move. By the way, Century Ply numbers out as well. Not the most impressive numbers. We'll get the management in moments from now. But Lupin is the buzzword really. 8% higher. Century Ply should be reacting negatively. But Lupin, 7.5% up in trade. I don't remember the last time that I saw Lupin move up with such a frenzy. Now, clearly the street was pricing in numbers not the best. And since that hasn't happened and the management has delivered an inline quarter, I think there is a bit of movement upwards. Now, whether this lasts or no remains to be seen. But, well, Darshan attributed this to some power of short covering as well. But this is a big move that has happened in Lupin. 1,084. I don't know if there were shorts in the system, Navneet.
Well, for pharma stocks, there were shorts, but let's not forget on Friday, the Nifty Pharma Index was the top sectoral gainer. So we did see some sort of traction coming back, and specifically for Neeraj, we were discussing now, this is the stock, if you compare it to the other large cap pharma stocks, if you look at the valuations in terms of PE multiples, this is the cheapest which is available. If I have to look at it, FY17, it's trading at almost 18 times its FY17, the price to earnings multiple. And if you have to compare it to anyone, Aurobindo or Dr. Reddy, Cipla, or even Sun Pharma, Pharma, the valuations are higher compared to Lupin. So probably that's the reason why, if somebody wants to put money in the pharma space, we have seen an improvement in the other regions. We know that the management has said that there are pricing issues still there in the US market, which is obviously the main market for majority of these pharma players, but good performance coming from the other regions. But we'll get you some management comments. The management will be addressing the media in a while.
And they'll be happy to do this as well. Sharmila, any thoughts? Lupin?
Yes, I think precisely as she said, I think the main concern is on what their commentary about what's happening in the US and pricing there is concerned. Because I think, pharma's sort of giving us a sense that it's bottomed out, which is why I think people are watching the earnings very closely this time round. Because I think that if you want to start looking at sectors which haven't done anything, in this last year or 2 years, then pharma would be an obvious sector. But if you were to get that sort of confidence from the earnings that things have indeed bottomed out, then I think, you would see a much more sort of an aggressive buying trade across pharma. So I think for Lupin, I'll just wait out to hear what the management says about pricing in the US.
Yeah, well, I think they are about to start speaking. Have started speaking. Let's get across.
And as you would have seen that there has been an improvement in our performance on sequential basis. Are you okay? Yeah. The sales on sequential basis has increased by 1.8%, about 2%. But interestingly, the profits have gone up by 27%. And it certainly is better than the sequential, but we have had a decline of 8% in revenue over corresponding quarter. That was, of course, what we had been speaking about in the past, that this year and part of next year would be under some pressure because of the pricing pressure in the US primarily. You would also see that most of our markets have done very well. India particularly has done extremely well with 24% growth. And all this that you see in terms of performance is primarily based on operational efficiencies, be it in manufacturing expenses or materials or R&D expenses. So I think we feel good about this performance, and for the details I'll hand it over first to Ramesh, and then we'll open it for Q&A. Thank you very much.
Thank you, Dr. Sharma. As Dr. Sharma was telling us, they've done very well vis-a-vis the previous quarter. Qualitatively, there has been in fact a decline in America for sure. $237 million last quarter coming down to 204, but that has not deterred us from actually showing a better performance. This is basically because, as Dr. Sharma was saying, India region has done very well. You've seen a 24% growth. You've also seen very good growth in the EMEA region, again a 24% growth. And if you were to compare this with the previous year, you found that there was growth in almost all regions. APAC, of course, went up because of Shionogi acquisition. There was, of course, growth in India, 16%. Vis-a-vis the previous year, Latin America went up by 44%. Again, if you speak about the India region, as I said, it was 16-17%. In terms of EBITDA margins, we've done fairly well vis-a-vis the previous quarter. This is probably because of the fact that the forex wins were in our favor this time around. Overall, we had about 43 crores in terms of the bottom line. The overall costs were also under leash. R&D costs were curtailed at 12.2%. In terms of overall profits, as Dr. Sharma was indicating, it's higher than the previous quarter by at least 28%. The ETR is also lower. We look forward to, in fact, better quarters in the days to come.
Right. Hi, Archana from CNBC. You had initially said in the beginning of the year as well that you would see this as a muted year, FY18. Now that you've seen some bit of operational efficiencies give you returns in terms of numbers this quarter, we are midterm now. Would you be reassessing your guidance for the year? I know you don't give guidance in particular, but internally, are you looking at a different set of numbers at the end of this year?
Well, working on operational efficiencies has been culture in our company, but the externalities of the business are so profound in terms of consolidation and other controls, regulatory issues, that combating that purely with operational efficiencies will not be will not be enough as much as we would wish that it is neutralized. And therefore, as you yourself said, we don't give any guidance for the future. Our business is to make sure that we have a sound strategy and work towards getting the right growth trajectory.
So you stick to the fact that this FY18 will be a muted year?
Yes.
So we've guided to a single-digit decline. I think we're maintaining that same guidance at this point.
Right. As far as the US market is concerned, there is still a lot of pressure. Mr. Sharma mentioned about the pricing pressure in the US market. We have seen a steady approval rate for Lupin per se, but these are also very commoditized products, not very large products. So how do you still assess the US market for the rest of the year in terms of your pipeline of products that you're expecting to get approvals and overall?
So it's been a challenging year in the US, and as you mentioned, the pricing pressures continue. We've had multiple rounds of consolidation through the year. We've just seen the impact of the Walmart McKesson consolidation, and sometime over the next 12 months, we're also going to see the impact of ESI and VBAT consolidation. So we expect to see some more pricing pressure through the year in the US. In terms of new product launches, we have a number of product approvals, but in terms of products that can really offset some of the price erosion on big ticket products like the Glumetza and Fortamet, we don't have those kind of opportunities in the year. So we're trying to get as much as possible out of our current portfolio, trying to maximize our portfolio out of Somerset. We've been able to build on the controlled substances products that Somerset brings to us. And we are building the brand business, brand franchise. Plus, we have a few product approvals, which I'd say could be good upside opportunities. We just got approval for Axiron very recently. That is a limited competition product, and we are just gearing up to launch that product in the next couple of months. So we hope that will be a big opportunity. We have levothyroxine, which potentially could be approved and launched later this year, but really the full year impact is going to be next fiscal year. So we have a few, but not too many that can offset all of the pressures on our exclusives in the metformin franchise and the pricing pressure.
I just want to understand only when it comes to EMEA region, your growth has been significant even if you look at this year-on-year basis. How much focus area would that be? And also in your LATAM region, with growth has been a little lesser when it comes to Q-on-Q basis. What will be the focus areas to offset for the pressure that you see in North America? And in FY19, do you see things improving in LATAM?
Yeah. So on the first question, in terms of focus in the emerging markets as well as EMEA, as Dr. Sharma said, apart from the US, every market has grown for us. So we've had stellar performance from every country around the world. The EMEA region growth was primarily due to South Africa, which is the largest part of EMEA, followed by Germany, where we've had record growth. We have a new management team and very strongly focused on CNS and pain management. They've done extremely well. And our partnered business in Europe has done extremely well as well. In EMEA, in particular in Europe, we filed for Mexelotine. It's now Namuscula. That's our brand name, trademark that we've got registered. And that's going to be the first neuromuscular disorder product, neurology product that Lupin is going to launch in Europe. We are expecting, hopefully, we'll make progress through the registration pathway. We will hopefully get approved next year. And we are gearing up to launch the product in the big 5 countries in Europe. So a big part of our focus in the EMEA region, apart from the South Africa, which we continue to build, is going to be on building the neurology presence in Europe, the big 5 countries. LATAM region has seen significant growth. If you compare year on year, it's 40% plus growth. On sequential quarters, also we have seen some growth in LATAM. I mean, both the countries in Latin America, Brazil and Mexico, are poised for strong double-digit growth over the next couple of years. and we continue to invest into growing the two businesses. We recently decided in Brazil to get into the branded side of the business, have got into dermatology, have licensed a portfolio of products that will enable us to go to physicians and start building a branded business in Brazil. In Mexico already, we have a very strong ophthalmology business that we are building upon and are looking to get into other therapeutic areas.
Particularly in India, if we could have a word, it's seen a good upside this quarter, but is it largely the impact of GST stocks coming back into picture, or there is something more to the growth story here?
So in India, we've actually been the fastest growing in the top 25 companies. So I think it's not just the GST part. Obviously, the GST impacted Q1 for the industry, and it impacted us as well. And one part of the growth was the pickup on Q2 over very muted Q1. But I think the bigger efforts are coming to.
And that's Lupin talking about their quarter. The stocks come off a little bit, but yeah, it's been largely an inline quarter. But Marico has come out with numbers as well. Revenues up 6.7%, EBITDA up 2.4%. Must say it's been a quiet quarter for Marico, at least from the looks of it. The margins too have contracted a little bit from the previous quarter.
That's precisely because of copra prices, Neeraj, were going up. We've seen a substantial increase in copra prices on a year-on-year basis. In fact, they're up 70% over this year. But the important number of volume growth we'll watch out, because in the last quarter there was a degrowth which one had seen in terms of the volume growth. This time we were looking at 8 to 9% growth in value-added hair oil as well as the Saffola segment. And international business is the other key area where we'll get some more details with regard to Marico. But despite of margin contraction, we've seen actually the stock is also coming off now. Actually, from the look of it, the numbers don't look good at all at operating level. So let's see, it is coming off. It's trading at levels of almost 312. But let's get some technical view on the markets. Joining us now on the show is Ruchit Jain, technical analyst at Angel Broking. Hi Ruchit, good afternoon to you. Thanks a lot for joining us today on Bloomberg Quint. What's the take on the market? The Nifty is trading almost at all-time high levels. Bank Nifty today, for a change, is sustaining that level of 25,000. What would your trade be at these levels?
Yeah, hi, very good afternoon. Yes, overall, if we see that the momentum in the Nifty has been supported by with a broad market participation, so we believe that this positive move is likely to continue near term. Now, whenever any stocks or any indices trade at an all-time high, we usually come out with a target projection using reciprocal retracements of the previous corrections. So if you see the previous correction in Nifty, which was from 10,180 to about 9,700, and if we take a 161.8% retracement of this correction, then it gives a target of around 10,480. So we believe that in the next 2 to 3 trading sessions, market would achieve this target of 10,480 in Nifty. Now, as far as Bank Nifty is concerned, we have seen some sort of underperformance in the index. And if we broadly see, almost since last 2.5 months, the stock has consolidated in a broad range. And in this consolidation phase, we have seen a resistance in the Bank Nifty around 200 levels. So unless we don't see any breakout in the Nifty Bank Index on the higher side, I think this consolidation phase would continue. But overall, I think if you see the stock-specific participation, then definitely one can trade with positive bias at even at current levels.
What about specific stocks? Let's get the first stock ideas from Jay Thakkar. He's Assistant Vice President for Equity Research at Anand Rathi. Jay, the 2 stock recommendations from your end first.
Hi, good afternoon. Well, first of all, I would say that market is definitely in a clear uptrend, and we have been seeing this high tops and high bottom formation that's been happening. We have 2 buy recommendations. One would be on Shriram Transport Finance. I think a short-term targets of around 1195 has been met in today's trading session, but we still believe that the kind of breakout which we have seen on the weekly as well as the monthly charts, the clear buy crossover in its indicators, the probability of this stock going forward and inching towards the levels of 1235 and thereafter maybe 1260 is quite high, at least in this week or so. On the lower side, I would say that 1160 initially in the short term as well as 1145 in the medium term seems to be a very good support. So I would say that till 1145 levels are not broken, 1250, 1260 on the upside in the medium term is quite likely. The second buy recommendation would be on Glenmark Pharma. Now, because of Lupin results, we have seen a good traction coming in for pharma stocks today. But last week too, we had seen that pharma stocks in the last 2 trading sessions has shown a good reversal basically from the lower levels, and we had seen some good long build-up also happening. Glenmark Pharma was consolidating clearly in a symmetrical triangular pattern from which we have seen a breakout on the upside, and the minimum equality target on the upside would come to around 660. One can buy this with a stop loss spike below 595.
Glenmark results are also this week, so that's a stock to watch out for. Rajat, what are your favorite trades at this point of time?
Currently, we believe that this pharma space is likely to show some sort of outperformance. After a long period of time, we have seen the Nifty Pharma Index forming a higher top, higher bottom structure on the daily charts. Aurobindo Pharma amongst this pharma space is one of the stock that we are recommending to our clients. Firstly, if we compare this stock within the other pharma stocks, then definitely this was the one of the stock which had bottomed much earlier than the entire pharma sector. We see the stock getting bottom around the end of May, whereas the pharma sector or the other stocks have recently got bottomed. So this has been one of the outperformance. We have seen a good consolidation phase in last 2 months, and it's likely that the uptrend would get continued and the stock could head higher towards 820, 840 kind of levels. So at current levels, one can go long in Aurobindo Pharma with a stop loss below 720 for target around 880. And second pick would be from the same sector, that is Granules India. Recently, we have seen that the stock has given a breakout from a falling trendline resistance, and the earlier resistance of around 134.35 in today's session has now acted as a support. So this uptrend should continue for very short term, maybe for 2 to 3 trading sessions. This stock can test levels around 146. One can go long with the stop loss placed below today's low.
All right, so those are the top trading strategies for the day. Let's just pull up Titan Company. That stock has seen 4.5% gains coming about. It's currently trading at levels of 617, almost at day's high. Remember, the 52-week high was seen in the month of September at about 654. Sharmila, any view on Titan?
Well, I think that most of these sort of listed jewelry players are doing quite well, I think, post GST, because I think post demonetization and GST, both those factors have sort of worked in favor of the listed jewelry play. And for Titan, we've seen from the kind of lows that they made, a fairly steady sort of a performance. Though, of course, I think the management commentary to do with the festival season was a little mixed, because I don't think that they've had a very strong festival season. I think at least until to the days leading up to the festival. Within those days, if they saw good buying, one doesn't know. That I think we'll come to know in the next quarter. But I think, yes, I think within that space, Titan would still be my top pick.
You have other stocks, that you like as well, or no? It's just
yeah, I think it's pretty much just Titan, because I mean, there are a couple of other plays, but I think that Titan is significantly better. The balance sheet is significantly better than the others.
Mahindra Life has come out with numbers, Sharmila, and frankly, I'm not asking Mahindra Life really, but real estate stocks have had a really good run. Do you like one versus the other? The net profit for Mahindra Life has really come off, so that stock is correcting. Anything else that you like here?
Very honestly, I've never recommended anything from the real estate play. In fact, if anything, I've gone for sort of, the proxy play. So I've recommended life insurance companies or ceramic tile companies or paint companies. So other than Godrej Properties, I have not really recommended any real estate play.
Okay. As Navneet said at the start of the show, I think some of the real estate names seem to be doing rather well for themselves. UPL should come up on your screen. I think it's come out with a fairly interesting margin and bottom line performance, UPL. The stock is muted because the top line numbers haven't been that great. But UPL, PI, this whole pesticide stroke fertilizer space has had an interesting quarter, or have posted some very good commentary in PI's case in particular. So that's really doing rather well for itself. But I must admit, there's something happening in aviation. Me and Pradeep have been stuck on this pocket now for the last 2 days. We've been talking about it with all experts. But everybody that we've spoken to in the last few days have been bullish about aviation in various ways. Some people say that the model is changing today. Rajiv Thakkar of Parag Parikh was saying that if Buffett is bought into airlines, then his past comments of it being a gruesome business is no longer true. And I remember Ramesh Damani talking about his interaction, saying, or somebody else, I don't remember who, saying that these companies have perfect moats around their businesses now. Who's going to go out and buy those gates and the slots, so on and so forth, as opposed to the three incumbents? So business is probably still viewed with a bit of skepticism from a long-term investment perspective.
Not buying into Indian aviation companies. I don't know if that can be the theme
aviation
for
business, Navneet.
Yeah.
His talk was that aviation is a gruesome business to be in,
For
right?
sure it is.
And he's changed it and he's bought. So the question, the thought in people's mind is that is aviation not necessarily now as gruesome a business as it used to be? Now, different regions will have different dynamics, and then you look into it.
Exactly, and I don't know, despite of the crude oil prices, we were chatting, these stocks are going out. We don't know whether there's something coming out in the sector in terms of, we don't know. I mean, there has not been any sort of deal which has been announced, at least in the last 2 to 3 years or something like that.
Yeah, so it's really surprising that crude is at 60
and still the stocks are going up.
Aviation stocks moving up.
And what, 40 to 50% of the operating cost comes from the ATF prices.
Yeah, but it's no longer 100, 120. So,
yeah.
I mean, the crude has really come off, so this is kind of, maybe the movement is justifiable and
let's look at the load factors. Let's.
All right. I think Indigo comes out with its numbers tomorrow. So
tomorrow.
Probably, that will throw some light, or at least on the fundamental side of the business and how the September quarter has panned out for these companies. But I just want to talk about few stocks from the broader markets which have been buzzing. Let's just pull up Rossel India. It's a tea company. It's up since the morning session. It's up almost 19%, so it could just get locked in upper circuit. Besides that, you've also got stocks like Quartz Cable. That's seen substantial gains in today's session. Quartz Cable is now up almost 18%. Sharmila, do you track any of these stocks?
No, I'm afraid not.
All right, let's just get a technical view on this then. Jay, on the charts, do any of these stocks look good to you? Rossel India or Quartz Cable?
Well, even I don't track any of these stocks.
All right, not a problem, but these are the stocks which are buzzing in the broader markets. Oil India is the other one, which is up almost 6%. That's touched its 52-week high in today's trade. It's trading at those levels of 373. Ruchit, on the charts, would you recommend taking any trade on Oil India?
Definitely, if one has to take a perspective from next at least 2 to 3 months, then we could see some sort of outperformance from the stock. And also, if we see the recent up move from the lower end of 260 on the weekly charts, then this up move is clearly an impulsive up move, a 5-wave impulsive move, which is usually seen in an uptrend. So I think this uptrend is likely to continue, and around levels around 350, 360 would now become a very strong support based on any kind of corrective moves. And on the higher side, the stock is likely to rally around 415 to 420 next 2 to 3 months time frame. So one has to look a broader perspective and take at least a view for next 2 to 3 months, and one can buy at current levels if one has a view for next 3 months.
Okay, there's another space which is buzzing, Sharmila, and that is liquor. If you look at it, United Spirits is kind of just holding on to the gains after the kind of action we saw on Friday. But United Breweries has moved up further by around 5% in today's trade with good volume. What do you like in this space?
Well, I think honestly, from what I heard from managements of both the companies, they are sort of somewhere indicating that this whole highway ban situation is behind them. As well as the fact that they're sort of going back to the margins they had pre-demonetization. So I think that's good news for all sort of alcohol companies all around. And the fact is that they don't really they have input GST, they don't have output GST. So they are not affected by GST to that extent. So this is one sector where you can expect that volumes will slowly go back to where they were. And I think if you look at it from that perspective, probably United Spirits, you should allow it to correct a little, because I think it went up a lot post numbers. But after a long time, we saw a very decent set of numbers from there, and they've had their share of worries. So I think that the consolidation period has also been fairly long. So I think within that space, I would like a United Spirits at this price.
There was an interesting takeaway, Pradeep, from the conference call. They said post the highway ban, almost 1,500 shops were closed. Out of those 1,500, 500 have opened. And by the year end, out of the 1,000 which are still closed, they expect 500 more to open. So that's where the guidance is actually coming from, because they've clearly stated for FY18, they expect a double-digit revenue growth and high teens of EBITDA margin. So that's probably what's working for United Spirits, and obviously the deleveraging of the balance sheet.
Yeah, so that's a trigger, and let's look at some more stocks in today's trade. Bata India is one that should catch everyone's eyes, up 5% with decent volumes, 15 lakh shares traded so far in today's trade on NSE. Sharmila, what's your call here?
Well, it's not a stock that I particularly like, but yes, I think, there could be some corporate developments that could make you take a closer look at Bata going ahead. So I think that's more like the buzz on the stock than really, I would say, really anything result driven. It's a stock that I'm sort of neutral on. I'm not particularly positive on it.
And what about the PSU banking space? We've seen the space rebounding once again after that sharp surge which took place last week. Then there was some bit of cool off, and I think there was some short squeeze which may have taken place. I remember on Friday the space was pretty weak, so maybe the traders would have thought the move is now over and they would have taken some shots. But clearly, if somebody would have taken a shot on Friday, looks like they're covering it today. Do you like anything if you have to take one position in the PSU banking space? Syndicate is up almost 8% today.
Well, then I would, in that case, look at the larger banks, because, I think it's one thing to say that you're going to recapitalize, but, how that money is ultimately used and what is the sort of reform that accompanies this entire move is actually what's more interesting going ahead. So while it was a great announcement, it sort of threw a lifeline to most of these banks which had been really under this sort of leverage strain for the longest time, and now there is a way out and they can sort of restructure their books, etc. It remains to be seen how successfully it really translates for a lot of the play. So if I had to buy anything at these sort of enhanced levels, I would still go with the larger names. I'd still go with a State Bank. I'd still go with a Bank of Baroda. I'd still go with a PNB, because I think here the effort for recovery has also started, in the sense that from the numbers you sort of get a sense that from a very, very over leveraged level, for instance for PNB, they've managed to make a fairly decent, they've attacked that NPA problem quite head on. So hopefully they'll use this opportunity that's come to them via this recap, more in a better manner than some of the other smaller PSU banks. But again, as I said, I think unless this, which is something that has been promised, that unless you see some kind of banking reform taking place along with this recapitalization, I think only then can you really make a complete success of this move.
Great. Sharmila, much appreciate you taking the time out and being with us. Thanks for taking the thanks for joining us on BloombergQuint.com. By the way, must mark Sun Pharma Advanced Research. That stock has really shot up in trade, up 16%. Confess ignorance to what's happened really, if there is any development, but a sudden sharp rise in Sun Pharma Advanced Research. Ruchit, any thoughts on Spark?
Usually, if we see, then since last at least couple of months, the volatility in the stock has increased significantly, and definitely today's up move has been coupled with very good volume, which is a positive sign. So the only advice could be that if you are already holding the stock, then you can continue to hold, because on the weekly chart also it is about to give a breakout. But if you are looking to enter fresh after 16% up move, then the risk reward ratio won't be that much favorable.
Well, 15.5% higher though for Sun Pharma Advanced Research. Seems to be a day for pharma. Though I must say, Lupin's come off a bit. The management commentary spoke about more pricing pressure in the US in particular, and that's led to this bit of a cool off too. Maybe also, as Darshan said, there was no apparent reason. I mean, the results were pretty much in line with estimates. Some bit of short covering took the stock higher. Post that, the stock is just cooling off and trading at where it ideally should be. I mean, these numbers don't warrant an 8% uptake. At best, probably a percent and a half, 2% up in trade. So good going for Lupin. It's up 2.5%, but I'm sure it's not a part of the Fab 4, because if I look at the broader end of the spectrum, Yash would have probably looked at a bunch of names which would have been a part of Fab 4. Maybe Lupin, maybe some of the others, but Lupin has certainly come off in the session today. Yash, is Lupin a part of Fab 4?
Yes, it is. I'm sorry to disappoint you then.
No, you're not disappointing me, Yash. Just that it's not as fab as it probably was about 15 minutes ago.
Totally. So actually the stock did open, it did jump as much as 9% after reporting its second quarter numbers, and they were largely in line with net profit coming in at 455 crores versus our estimate of around 443 crores. Revenue also saw a fall of around 30% on a year-on-year basis, but still largely in line with our estimates, and the stock is now down around 2.5% after reaching the highs of around 8.5. ONGC is another stock on our radar. The company had reported its highest quarterly profit in over 2 years, which led to IDFC Security maintaining its outperform rating on the stock while hiking the target price to 230 from 215, indicating an upside potential of close to 25% from its previous day's close. We have PI Industries buzzing in trade. The stock is up almost 9% after 40 lakh shares exchanged hands in 2 major bulk deals earlier in the day today. And lastly, we have Rossel India. The stock is up almost 18.5%, and we had a bunch of tea companies buzzing in trade today. Don't really know what the reason is, but it has managed to snap its 4-day losing streak, with volumes too coming in substantially higher at nearly 8 to 9 times its 20-day average.
Well, Lupin was the most interesting stock here, and thanks Yash for the details. But Neeraj, as you were talking about why it should have been or should not have been in the Fab 4, the stock kind of hit a 2 months high in today's trade and is back to almost where it was. So a lot of volatility is seen in this counter, and in fact it would have become meaningful only above 1075, but it failed to sustain. So really, there was significant supply at higher levels. Maybe there is something that people didn't like and saw it as an opportunity to probably exit.
Yeah, well, so Darshan is here. Let's try and pose that question to him as to whether there was something in the con call that stood out, because I thought there was one comment on pricing. I don't know if that's the key reason or is there something else too. But Darshan, an 8% uptick which you mentioned, short covering could have been part reason, and then an equally sharp fall as well.
That is right, and like we told very clearly, the results weren't amazing at all. It was only short covering that came out, and that is why, the Lupin counter moved up almost 8%. Now, post that, if you go through the internals, then the press release came out and everything. So basically, the US, the degrowth was expected to be 25%. It's down almost 30%. India growth was expected to grow by almost 22%. It grew by 15%. So overall growth was not there. Now, if you take a look at the internals, it was the revenues were the profit was aided by higher other income. Last time it was close to 23 crores. Now it's in this quarter it's close to 75 crores. R&D cost as a percentage of sale, which was over 13% all the time, now they've decreased it to almost 12.5%. So that is another reason why their cost controls came out. So there's no cost control. In fact, they're bringing down the R&D cost, which is not good. Now the final nail came in the press conference. What they said, first of all, they said that Vinita Gupta said that the pricing pressure will continue, and they expect it to even increase further with the Walmart McKinsey deal that is coming up, and there's one more deal that is coming up in terms of consolidation there. So they are saying that is happening. Secondly, they are saying pricing, they are saying that the guidance does not change. So they are saying an 8% decline in top line for the entire year. That does not change despite this result. So overall, there was nothing spectacular. I'm not saying it's a bad result. I'm saying that this does not deserve an 8% up move, and it corrected because it's something of reliable. Now 3% is fine because what the results came out, it wasn't an 8% impact was something that was much ahead of what the street was anticipating. So clearly disappointing comments coming in the press conference, and the body language was not very, very strong. If you're looking at it, they're saying we're doing cost controls and we are growing in other regions, but let's remember, US is the mother market. If they are degrowing, if they are not getting margin, if they see pricing pressure continue, you can just read between the lines what they're trying to say.
Well, point well taken. US is the mother market for Lupin, and there has been a degrowth from that region, as Darshan highlighted, and the stock too seems to be off a day's high, now sitting with gains of only actually under 3%. Now it's up only about 2.2%, still holding that 1000 mark at 1024. Let's just pull up HCL Technologies. This is the 5th straight day that the stock has seen those sharp cuts coming about. The stock's fallen to levels of almost 834, and it's now trading almost at day's low with cuts of about 2.5%. Ruchit, on the charts, would you recommend if somebody was holding short positions on HCL Technologies to book their profit, or do you see further lower levels coming about?
So if we see the positional charts, then around the month of June, the stock had formed a very strong support base around 825, which is not far from current levels. And definitely it's the last 4-5 days of correction. If anyone is built up a short position in this fall, then around 825, 830 zone, he should look to book profits and get out. It's not recommended to go long, since the stock is also breaching its 200-day moving average. But I think just because a sharp fall has been seen and the stock is nearing its support of 825, some sort of just a pullback move could be seen in next few sessions.
Okay, that's the call on HCL Tech. Market expert Dharmesh Kant now joins us on the show as well. Dharmesh, good afternoon. What's your take on some of these numbers which have been announced? Let's talk about Lupin that we have been discussing. Most pharma companies are actually likely to show a kind of degrowth in business compared to the same quarter last year. But what are the indicators that you will be really tracking to figure out whether there is a bottom in place, things are not worsening here on, and then what would be your strategy?
Yeah, good afternoon. See, I don't think for pharma companies the bottom is in place, and the story remains the same. Nothing has changed fundamentally for the pharma companies. As far as blended realizations coming down, the pricing pressure continues to be there. It was the same last quarter as well. And all the management commentaries, if you look into, they are saying the same thing. There is no change in what they are, saying, what they said earlier. Secondly, channel consolidation in US will continue to happen. Margins will continue to squeeze, and competition is going to tighten up for all the pharma companies. So fundamentally, I don't think there's merits a case where you can see a turnaround coming. The only hope is more and more ANDAs getting approved, and the plants which are under US FDA observations, they get an approval. Sun Pharma is one of the big victim of all those observations out there. So if those kind of scenario happens, like they are getting plant approvals, and then maybe we can see volumes again coming back, and that again is a long drawn process. It won't happen overnight. It will take 6 months to a year to roll out the products back into the market, and then you need to regain the market share which you have already lost. So for me, it's the headwinds are very strong headwinds are there for pharma companies, and it will continue to be there. You will see trading pop-ups coming in between, but that is it, nothing more to it. So again, as always, I have been sticking my neck out on Aurobindo Pharma. I think that's the only pharma stock in the play where you can comfortably go and buy and hold it for a year's perspective for 20 to 35% kind of a return. Other than that, fundamentally, pharma space is on a weak wicket.
Stay on, so much more to talk about, but Century Ply posted the numbers, the bottom line numbers by their own high standards have missed the street estimates by posting a dip. Let's get in the management. Mr. Keshav Bhajanka, he's the executive director of the company, joins us right now on the show. Thanks much for joining in, Keshav. What would you attribute this quarter's performance to? Were there GST related factors that played out? Why is there the dip in bottom line?
Two factors came into play. Firstly, GST for us was set at 28%. By us, I mean the cloud industry, against the expectation of 18%. And as such, a lot of people are under the impression that GST is going to be reduced to 18%. This is a dialogue that has been repeated month on month. And I believe a lot of the retail channel, under this expectation, is actually looking to liquidate their stock until and unless GST comes back to 18%. Now, having said that, this has been a transition quarter as well. As the e-waiver has not been implemented, I believe it is a bit easier for the unorganized sector to come back. And as such, there is pressure on all the organized players. We also faced a certain supply constraints out of one of our largest units because of some raw material availability problems. And I think going forward, this problem has been rectified and we should see much better numbers.
All right. Keshav, your finance cost during the quarter, if I compare it on year-on-year basis, has gone up slightly. What's the total debt on the book, and has the cost of debt gone up for the company? Is that the reason why the finance cost is inching higher, or the total debt has gone up?
The total debt has gone up. This is because we have now commissioned our MDF plant, which is the largest capital investment that has been made by this company. So we commissioned the plant as of 1st of October, and the revenue hasn't come in, but the interest has been, interest for the plant has already begun. I think that is why interest costs are slightly higher. Otherwise, long-term debt has actually reduced.
Okay, and your EBIT from the laminate and allied products have seen a good growth. It's come in at 21 crores versus 9 crore from the first quarter. Any specific reason for that?
You see, as I told you, in plywood, the GST was set at 28%, which is the same as the prevailing rates earlier. In laminates, while the same rate was prevalent earlier, the GST rate came in at 18%. So in the first quarter, there was mass destocking, against which there was restocking in the second quarter. So if you look at it year on year, we are at a growth and we are at a favorable position. But this quarter is an exception because of strong headwinds from the first quarter.
Could you tell us if the second half of this year can be better for the company? Because if I compare second half numbers to last year's second half, they're just about flattish.
And you see, in the course of the first half of the year, our particle board plant, which we had commissioned earlier, has been running at full capacity. The EBITDA for the particle board plant in the past quarter was 30% plus. And going forward, as I just told you, the MDF plant has been commissioned, and we are expecting very strong EBITDA numbers from the MDF plant as well, along with a total top line of close to 140 to 150 crores. So I think in the second half, both the top line and the bottom line figures should look far better than what they are looking today.
All right, Keshav, thanks a lot for joining us and giving us the heads up as to how the September quarter earnings have panned out, what worked and what didn't work for the company. Clearly, GST implementation impacting slight bit of numbers there. Century Ply now trading almost flattish, though with negative buys. The numbers were not at all good. In fact, it's just been a flat performance on top line. The margins too for the company contracted, and the finance cost went up as the company commissioned a new plant. Well, let's just pull up Nifty Auto Index. That's seen good gains. We've got stocks like Bharat Forge, MRF, Tata Motors, DVR, Motherson Sumi. All these stocks have seen gains between 2 to 3%. So good day for the auto stocks.
Escorts.
Escorts too is up in trade?
Yeah.
All right.
That's a life high for Escorts today, Navneet.
Wow. All right. Escorts, oh, it's up almost 5%. It's trading at day's high. That's a good spot, Neeraj.
Yeah.
Scott's up 5%. All right, let's get some auto view from Dharmesh Khan. Dharmesh, do you like anything in the auto space? Especially, what's the view on Escorts?
See, I think Scots have run up quite a bit, and on valuation metrics, it now looks really expensive. But auto as a space looks very attractive, and I think along with BFSI segment, auto will be the space where one should be, fundamentally investing into, and particularly the likes of Hero MotoCorp or our TVS Motor. I mean, two-wheeler is the space which looks more attractive to me rather than four-wheelers or farm equipment and farm auto. I mean, CV manufacturers like Scots and M&M. So I would, give a miss to Scots or M&M. If you are holding, I would suggest to take profit taking out there. But the auto ancillary space and two-wheeler space still looks pretty attractive, and the top picks among them would be Hero MotoCorp and TVS Motor in the two-wheeler space. Bharat Forge, Motherson Sumi, all are looking very attractive because there are two things. One is the Indian auto industry picking up. Second is the European business again picking up, and thirdly the US market, the Class 8 truck orders all are coming back in, and there the economy is picking up. So overall for auto ancillary space it looks pretty attractive, so one should be buyer out there. Tire space again, it's more of a trading bet, be it Seat, MRF or Apollo tires. So there I think one should be trading place should be there, but from fundamentally investing perspective I think one should stay away.
Okay, stay on, gentlemen. So much more to talk about. But first, it's that time of the show when we look at what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Gentlemen, both of you, good afternoon. Yatin, let's start off with you first. What are you gathering from your sources?
Thanks for that, Neeraj. We have Yes Bank. That is one stock wherein dealers are recommending a BTST based on F&O trends. That stock is up a nice 2.5%, and in general, the kind of selling we saw in private sector banks, probably dealers are expecting some bounce back as far as this pack is concerned. On the contrary, we have HUL. That stock is down 2%, and domestic funds are said to be sellers as far as this big FMCG name is concerned. And finally, watch out for Zen Technologies. That is one stock 16% up right now. Today they gave an investor update wherein they said that over the next 12 to 15 months they will be executing orders worth over 350 crores. And if you were to use that 350 crores as the top line, the per quarter run rate comes up to be close to 70 crores, which is double than what they are doing currently. So in terms of the earnings potential, dealers are quite excited about the opportunity in the defense space. So Zen Technologies, that is one stock wherein dealers are expecting some further trading upside. Darshan?
So Ajanta Pharma will come out with numbers today. So the market is ripe with the numbers of what can have. So the street believes that Ajanta Pharma will deliver a strong set of numbers, and that is why ahead of the numbers, 3% rise in the stock price is something that we are seeing. Just Dial is the next one that dealers are talking about. Indigo, let's talk about Indigo first. A large FII fund is the buyer today, so it's a limit buying, it's not an unlimited buying. So that is why the price move will be controlled, but a large FII is accumulating this counter. And finally, the last stock that dealers are talking about is Just Dial. That is where there are murmurs of an M&A activity happening. The counter is up almost 4% in today's trade, and that is something, it's up almost 7% now. So that's what dealers are talking about. They believe that there could be a potential M&A in this stock. So that's keeping the stock abuzz today.
6.5% higher, 7% higher for Just Dial. These are some interesting set of names. Just Dial, Zen Technologies. I think a couple of days ago we were talking about Unichem Labs. So a bunch of these stocks which seem to be doing rather well for themselves. Our two technical experts with us, and I want to ask the question to both of them. Jay, to you first. A Just Dial as a trade, would you take one?
Absolutely, Neeraj. I think that this stock seems to have really bottomed out, at least for the short term. And what we also see that the recovery has been quite decent. I would say we have seen a decent high tops and high bottom formation that's been happening in this stock. A clear upward sloping parallel channel post, almost it forming a double bottom kind of a pattern on the lower side. And the move so far has been quite impulsive as well, even after a medium-term correction. So I would say on the lower side, from the recent levels, I would say the stop loss or the support is quite at the lower levels. It's spiked at around 384, 85 levels from these levels. But I think looking at the risk reward, the kind of targets which are coming on the upside, that comes to around 456. I think it's quite justified for the bulls, and I think it's near about 1:1.5, 1:2 risk reward. Hence, I would go long on Just Dial.
Right, so that's the technical call coming on Just Dial. One can look to go long. Just pull up the chart of Berger Paints. The stock's now trading almost at day's low. It started the day in green, but currently it's seeing cuts of almost close to 2% coming about. Remember, higher crude oil prices don't augur well for these paint companies, but Berger Paints specifically has seen sharper cuts coming about just in the second half of the session. Ruchit, on the charts, do you see any trade on this counter?
Actually, nothing specifically. We have seen that the stock has recently given a breakout from a trendline resistance, and now on this pullback move, I think around 258, 260 again would act as a very strong support. Even if you see the RSI readings, then they are pointing out towards a range-bound move in near term. So I think it's quite likely that we would see a time-wise correction for maybe next 1 or 2 weeks in this stock, and maybe around 258 to 280 would be the range in which the stock could consolidate.
Okay, let's also look at Suzlon and Inox Wind. Both these stocks have moved up with good volumes today. Jay, if you have had a look at the chart, well, the news update suggests that SBI has kind of warmed up to funding the alternate energy segment. There could be some details coming up later today. What's your take on both these charts?
Well, Suzlon, I'm quite clear. In fact, Pradeep, I would say in last couple of trading weeks, Suzlon has provided this opportunity second or the third time, wherein it has come towards the range of 15 and a half, I would say, on the lower side, which is quite the lower end of the symmetrical triangle pattern that has been forming on the monthly as well as the quarterly charts, I would say, because it's a quite large pattern. And on the lower side, it has tested the lower end for around 2 to 3 times in past couple of trading sessions. So I would say yes, a stop loss below 15 is quite ideal for going long on this stock. On the upside, if it manages to even touch the upper end of the range, that would be coming at around 22, 23 levels. So I would say risk reward is definitely in the favor of the bulls. The indicators have shown a good reversal, I would say, on the daily as well as the weekly charts. On the monthly charts, we still require some confirmation, but I would say with that move coming towards the upper end of the range, we would definitely see a buy there as well. So there shouldn't be a point of worry, and wherein the risk reward is quite in favor, I think monthly indicators can be ignored as of now. So I would say Suzlon is definitely a buy candidate. As of now, I would say Inox Wind has not given that kind of a confirmation, although it has formed a good double bottom and has provided a breakout from the same. So what we can say is that from the medium term point of view, we can see a good move at least coming for the short to medium term towards the levels of 177 to 187 levels on the upside. It really needs to surpass the levels of 200 in order to clearly come out of this bear zone, because we have seen this stock in fact falling since a couple of months to quarters, I would say. So Suzlon has been consolidating, whereas the trend for Inox Wind was down. So there's a difference between these two stocks. So I would say Suzlon can be a bet not only from the short to medium term but also from the long term point of view.
Right.
But Inox Wind is just a trading bet as of now, and one can target around 187 on the upside till it managed to hold 119 on the lower side.
Okay, let's get in closing strategies very quickly. Ruchit, to you first, your top closing strategy.
It would be a buy in Just Dial first. We have seen that the stock has given a breakout today with very good volumes. Just to add a disclosure that we have already recommended it to our clients also, and we are expecting somewhere targets around 458, 460 in next 2 to 3 trading sessions. Apart from this, Anandraj Industries would be my second pick if I have to buy around closing right now. The stock is giving a breakout from a falling trendline resistance with decent volumes. So I believe in next 1 or 2 days, the stock would hit a high around 68, 70 kind of levels.
Okay, what about you, Jay, your top closing strategy?
Well, I have two buy recommendations, Neeraj. One would be on a BF Utilities, wherein we have seen a good breakout coming from a symmetrical triangle pattern that's been formed in the right shoulder of the inverse head and shoulders pattern. And the move prior to this consolidation is quite an impulse move. So the probability of an upside is quite high for this stock. On the lower side, I would say for BF Utility, one can place a stop loss at around 401.2. However, it's a medium term call, so the stop loss will be far, but the target on the upside would be at around 465 and thereafter 480. And one more buy recommendation which I would like to give would be on Aurobindo Pharma, which Ruchit also mentioned. The stock has provided a very good breakout from a downtrend line resistance, hence the probability of this stock inching towards 800 going forward is quite high. So one can also buy alternatively 780 call option.
All right, what to watch out in tomorrow's trading session? Let's head across to Jayesh Khilnani to find out that. Jayesh, over to you.
Navneet, watching out for some key economic events and a bunch of corporate earnings scheduled for tomorrow. Starting off with, of course, early in the morning, we'll get the monetary policy statement from Japan and the manufacturing, non-manufacturing data from China. So that are the global economic events that we are watching. Of course, in the evening tomorrow, we'll also get the India fiscal deficit number. So we'll be keeping a close eye on that one. But moving on to earnings, which is the flavor of the season, the two nifty companies scheduled to report numbers tomorrow. Starting off with Bharti Airtel. Now, Sumit tells me that Q2 is a seasonally weak quarter, so we'll keep a close watch on if there are any surprises. Dr. Reddy's, we are expecting top line and bottom line to grow as by single digit. Some of the key earnings, the other earnings that we are going to keep a watch for, to name a few: Dabur, Divi's Labs, Inox Leisure after PVR reported its numbers, and SBI Life Insurance will be reporting its numbers for the first time after listing.
Thanks, Jayesh, for all these details. So these are some of the numbers to watch out for. Well, let's have a look at Bhushan Steel. This stock has almost crashed in last few minutes. If you look at it, it's down by 6%. Sequent Scientific, that's yet another stock which has fallen over last few minutes if you look at it. So these are some of the stocks which have been moving, though moving down in last minutes of trade today.
Two more stocks. Let's just pull up Dewan Housing, a counter which is trading at day's high, and the other one is Bank of Baroda, which is now slipped into the red, and even the Nifty PSU Banking Index, which was up almost 4% at one point of time, is down to gains of just about closer to 1%. So clearly the rally in the Nifty PSU Banking Index seems to have fizzled out because Bank of Baroda and State Bank of India, now these two are the major heavyweights on this index, and State Bank of India is also trading at day's low. Jay, would you initiate any position on Bank of Baroda, a counter which has given up all its gains?
Well, Navneet, no, I would say most of my targets on the upside has gotten achieved. So Bank of Baroda is clearly an avoid from my side. If something really I have to pick from the PSUs, it would be PNB and SBI. These are the two among the large caps wherein I think there can be a sustainable up move. Bob has reversed quite well from the upper end of the rising wedge pattern.
Okay, Dharmesh, very quickly, we can't really have a long drawn answer. Maybe we'll take in this thought from Dharmesh in a while, but I just want to mark Jet Airways. That one is zooming up, flying very, very high, 575 and counting, now 9% higher. This is a big move for Jet Airways, and this is the only one which is, I think, doing such a big move. I don't think SpiceJet and Indigo to an extent have such a large move, but Jet Airways is a bit of an isolated move. Yes, the others are in the green, yes, but not in such a big way as Jet Airways. So good going really. SpiceJet, in fact, in the red. So it's Jet Airways which is flying high. Maybe there's some company specific thing, development that could be on the annual. But we'll talk about all of that and more. Let's first kickstart the market wrap. Pradeep Johnson to talk about how the large caps and the indices have done.
Bank Nifty, well, Nifty has once again seen new highs, record levels in today's trade and probably closing at a new high level as well. And it moved in a very narrow range through the day. Look at Nifty Bank, which also is very close to 25,000. Let's see whether it can really close above 25,000 mark or not. If you look at mid cap and small cap, overall the broad market was also positive. Rather doing better than large caps really. If you look at small cap, that gained 1.5%, and BSE mid cap also gaining roughly 1.25%. So net a good day of trade. Now some of these stocks were definitely responsible for index not moving much higher, not building on the early gains. But if you look at the top movers, first up ONGC, Bharti, RIL, these are some of the heavyweights. Also HDFC Bank and TCS that have been moving up strongly. PSU Bank slipped during the day, like SPI, which is closing the day with total gain of just 0.5%. ICICI Bank, in fact, closing in red. But right at the bottom, you have HUL, ITC, Coal India and Tata Steel. These are some of the heavyweights that were kind of responsible for dragging the market down or keeping it in a range rather during the day, looks like.
Yeah, certainly. So that was as far as what the large caps did, but the mid cap end of trade punctuated by enough and more gains or losses to result reaction. So let me bring up some of the intradays for you. I'll start off with one loser, Adani Transmission. It wasn't the best of quarters for Adani Transmission, and it showed in the way the stock behaved. So look at that move, 5% down for Adani Transmission, not the best of days. On a day when the large caps and the mid caps did reasonably okay. What about some specific stocks which reacted positively to numbers? Ramkrishna Forgings came off from the highs of the day, but it was still a pretty good quarter for RK Forgings. So up about 5.5%, but certainly off the highs of the day in a very, very big way. PI Industries, the results were ho-hum, but I think the commentary was very, very strong, and that's why the stock ending up 8.5%. Speaking of 8.5%, 9%, Jet Airways stands out. I was just marking the stock before I went to Pradeep, but Jet Airways up about 9.5% in trade, so really strong show put up by this one too. In fact, the chart as the day went by only became stronger and stronger. Sun Pharma Advanced Research, a very interesting move. I don't think it did too much for most part of the trading day, but somewhere around here, somewhere at the closing moments of trade, it just suddenly shot up in trade. So Sun Pharma Advanced Research about 13.5% higher. Really, really good going for that one. Last but not the least, just want to mark what happened to a couple of smaller mid caps. One of them is Ceylon Exploration. Because of oil prices moving up, Ceylon had a pretty good day. So that is one. And the other one is HOEC, which came out fairly positive commentary about the quarters ahead after the numbers. And that stock ending the day about 1.25%. Navneet?
Well, let's look at the contributors on the Nifty. The markets, however, closed off day's high, but still a strong closing coming about there. The top contributor was HDFC Bank, which has almost 10% weightage on Nifty. That contributed nearly 15 points. Reliance Industries contributing about 7 points. TCS ended the day in green, so that contributed nearly 5 points on index. What dragged the index lower, rather what capped the moves, was the heavyweight ITC dragging it lower by 9 points, HUL dragging it lower by 4 points, and HCL Technologies accounted down for fifth straight session, trading around those levels of 820 now, was also weak in today's trade. Well, let's also look at how the advanced decline ratio panned out throughout the day. We know that, in fact, the broader markets outperformed. This is the volatility index. Let me just tell our viewers that VIX opened on a green note. In fact, it opened with 6% uptick, and throughout the day, it sustained those moves. It's telling you there could be some sort of near-term correction which could come about. Just a word of caution there. India VIX today also closed with gains of almost 5% there. This is the advanced decline chart, NSE stat. Clearly, it was the day for the broader markets. Good gains seen for the mid-cap and the small-cap index, and this is clearly visible on the advanced decline, 2:1 in terms of advances and declines on NSE. How was the participation today? This is the total turnover that you can see. Well, way below average. Usually, we see turnover of 5 lakh crore. NSE F&O was just about 3.1 lakh crore. The cash turnover was little bit on the higher side. NSE cash, almost 33,000 crore of turnover coming about. Which were the top sectoral gainers? Then Nifty Realty surged 2%, Nifty PSU Bank off day's high but still closing the day in green, 1.2% gains coming about, and Nifty Pharma was also up nearly 1%. In terms of sectoral losers, you had Nifty FMCG and the Nifty IT index, which ended the day in the red. Over to you guys.
Thanks a lot for that. Dharmesh, before we let you go, and thanks so much for being with us patiently today. Is there a pocket that is suddenly looking like putting up its hand? I mean, we've been talking about aviation a number of times. I think some of these agri/pesticide/fertilizer companies, the likes of PI or UPL, had a fairly interesting quarter too. Do you like anything here?
I think agri and chemical side looks interesting. So PI Industries or Kaveri Seeds, they all look quite interesting out there. UPL is also looking quite attractive. So to sum it up, agrochemical space looks pretty attractive in the current environment and the economic environment in which we are, followed by automobiles, auto ancillary and BFSI. But as far as aviation sector is concerned, it was never a buy in my list. It was just always a trading pop, very much dependent on the crude prices fluctuation. And I do think that today's up move on Jet Airways, even if it is for some corporate announcement, should be a good shorting opportunity for the traders. Fundamentally, it was never a buy. You cannot really make wealth on a sustainable basis by buying into aviation stocks. So that's the fundamental take. And crude prices are showing firmness. So in spite of a supply hike, you are seeing Brent and NYMEX, both crude prices picking up. And I do think one can be pleasantly surprised. I mean, crude oil producers, when it touches above 60 on the NYMEX thing, and WTI may go to $70. So that would be a scary situation for even downstream companies like HP and IOC. So that's the gray area for the market.
All right, let's get some closing thoughts from our technical analyst then. Richard, how would you be approaching the markets tomorrow?
Yeah, mostly with the positive bias itself. We have seen last 3-4 trading sessions, the market has been trading with a positive market breadth. And as I earlier mentioned, that the reciprocal retracement theory is indicating a probable target around 10,480. But if I would look at an intraday perspective, then we are not getting that very large ranges in the index. But there are more stock-specific opportunities available which are fetching better returns. So in case if anyone is looking from an intraday perspective, I would still advise to go on a stock-specific approach and trade with a positive bias.
Okay. What's the index view that you have, Jay? The Nifty view?
Sure, Neeraj. In fact, we have been seeing this high tops and high bottom continuing, and today's trading session, we have seen the last trading session's high getting taken off. Hence, the near-term support, the immediate support would be, the last trading session's low, and that would be 10,311. It's quite nearby from these levels. I would say it's not only an opportunity from the medium-term traders, which are eyeing around 10,500, in this series, because wherein we have seen the maximum OI that's been built up on the call front. But on the put front, I would say 10,200, 300 also remains quite an active puts, and I would say those will act as a very crucial support going forward. For the medium term, definitely it's 10,200, but for the short term, 10,300 put side as well, and 10,311 as far as the swing low is concerned. That is a very crucial support. So with that as a stop loss, one can target 10,420, 30 on the lows on the upside. But for the medium term, we have our target intact. 10,500 is the initial target, but thereafter we can also see the channel target that comes strong, 10,600.
Okay, we'll leave it at that. Thanks much, gentlemen, Ruchit as well as Jay, for joining in today and giving us that perspective. Well, I missed Pradeep Pandya's chart on EIH today, but maybe that we'll save for some other day. For now, we'll take a very quick break and come back and talk more about the key highlights of the trading day today.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Watch us live in conversation with Ramdev Agrawal on the power of quality.
Quality of business and quality of management, because that's the 90%, 95% of the investing. Quality is the starting point. If you don't have quality, it's not taking up the journey at all.
Watch us live in conversation with Ramdev Agrawal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Welcome back. You're still watching Countdown with us on Bloomberg Quint Live. Well, it was a good start to the week today. We had all-time high levels once again coming up for Nifty. Bank Nifty also inched higher in today's session, led by gains seen for the PSU banking space. But the Nifty PSU banking index, which was up almost 4% at one point of time, saw some sort of profit booking coming about owing to declines seen for stocks like Bank of Baroda as well as State Bank of India, which has almost 60% weightage on that index. But let's look at the Nifty gainers then. Yes Bank was your top gainer there with gains of about 2.5%. Lupin came out with its numbers, which were in line with what the street was estimating, but the stock closed off day's high. It rose almost 8% post the earnings, but some sort of supply came in on those higher levels. Bharti Infratel will be coming out with its numbers, so ahead of that, positive closing for that counter. The auto pack was pretty active, so the likes of Eicher Motors, Tata Motors were up and about. Heavyweight Reliance Industries today contributed, and Tech Mahindra, Ambuja Cement were a couple of your other gainers on the index. So on the losing side, HCL Technologies down for fifth straight session, saw cuts of nearly 2%. From the FMCG space, you had both the heavyweights, ITC and HUL, which were down in that range of 1.5%, and Wipro and M&M were also weak in today's trade. Let's just pull up India Volatility Index. That was up throughout the session, indicating that there could be some sort of correction because the VIX throughout the day did not correct at all and finally closed with gains of about 6%. And in terms of broader markets, you saw stronger gains coming about. The Nifty mid-cap as well as the small-cap index today, Pradeep, registered strong gains.
Yeah, and you could look at stocks across sectors that were doing well today. HEG and the other metal stocks were definitely in demand, and also smaller PSU banks like Vijaya Bank, IDBI, and even NBFCs like Diwan Housing moving up in today's trade. You had some more stocks like Jyoti Laboratories, Rain Industries also doing well in today's trade, and of course PI Industries, that was a star performer in mid-cap segment.
Yeah, it was. Rain Industries too interesting, 6.5% higher. So a bunch of these names. But remember, aside of what's happening in our market, it's been a mixed start to trade in the European markets. Let's head across to Ed Ludlow, who joins us from London studios with the movers and shakers in trade there. Ed, good morning to you. How is the scene looking like out there?
Yeah, good morning to you. And as you said, it is a mixed Monday. A number of themes playing in the markets. Of course, investors are looking at the political situation in Spain and Catalonia. We're waiting on the Fed, but there's no one big driver. Let's focus in on stocks to start with. The Stoxx 600, the main gauge of European equities, trading pretty flat first thing this morning. Out of the industry groups, 7 of the 19 are up. No real discernible leader. Oil and gas making some gains, and there's big volumes across tech. But as I said, no real driver there. Looking at individual European indices, the CAC 40 in France is trading flat. The DAX up marginally, 0.1%. The FTSE 100 in London down marginally, 0.1%. But it's in Spain where there is some price action. The IBEX up 1.5% today. Remember back to Friday, we had that declaration of independence by the Catalonian Regional Parliament. It was then quickly followed by the Spanish central government, who took over control of the region. They ousted that regional government. They took back control. They started to install their own regime. And on Friday, stocks closed down 1.5%. But here we are Monday, stocks up 1.5%. Over the weekend, the Spanish central government peacefully went about installing central control from Madrid. We saw big pro-unity demonstrations, hundreds of thousands of people take to the streets of Barcelona. And so investors looking at Spain this morning, they seem to be sanguine with stocks rising. And that's kind of keep calm and carry on attitude is reflected in bonds as well, because the spread between the Spain and German 10-year down 5 basis points, narrowing somewhat. There's also some thoughts in the data, European economic confidence at its highest level in 17 years. And that's actually helped support the euro. The euro is up marginally 0.2%. Some of that optimism coming from the situation in Spain, but we have had this data. There's also some dollar weakness playing into that. The dollar down against many of its major peers this morning, including the euro, including sterling. Why? Well, we're waiting on the Fed. Of course, the expectation is no hike this week, but we're setting ourselves up for a hike in December, an 84% chance of that happening. And the second part of that Fed story is who is going to be the next Fed chair. 3 people familiar with the matter say that it is going to be Fed Governor Jerome Powell. That's President Trump's current pick, but they also say, adding a bit of drama, adding a bit of tensity to it, that the president could change his mind at any time. So that's all to come still this week. Markets and investors here in Europe looking at the political and looking at central banks.
Thanks, Ed Ludlow, for all these details. All eyes on Fed meet of Wednesday and the announcement of Fed chair thereafter. But Jeff Bezos has overtook Bill Gates as the richest person in the world. That's according to the Bloomberg Billionaires Index. The net worth of the founder of Amazon stood at $93.8 billion at the end of Friday, ahead of the Microsoft's co-founder, $88.7 billion. That's the net worth of Bill Gates. Jayesh Khildani is standing by with a closer look at these data. Jayesh.
That's right, Pradeep. So on Friday, Jeff Bezos did actually become the richest man in the world, with the net worth surging more than $90 billion. Now, on the way, he has overtaken Bill Gates, whose net worth stood at about $88.7 billion. Now, Bill Gates was, the richest man in the world since 2013, and Jeff Bezos has now surpassed that. Jeff Bezos on Friday, the net worth got added by more than $10 billion after shares of Amazon surged nearly 13%. Now, this 13% surge was not, backed by solid earnings that Amazon reported. The sales and the profit number came in ahead of expectations, and that's why we saw a jump in the stock. Now, there were, if you look at the chart of the net worth of how Jeff Bezos is compared to, Bill Gates, you can see that the white line represents Jeff Bezos and the blue line represents Bill Gates. Now, there are few interesting data points which come out while you look at this chart. So, if you look at July 27th, this is the spot where you actually saw Jeff Bezos becoming the richest man in the world, but stock of Amazon did not close, as high as they would want it to be, and Bill Gates retained the spot. Now, on August 15th, what happened is Bill Gates donated Microsoft stock worth of $4.6 billion. So that is how the net worth of Bill Gates had actually come down. And as of October 27th, which is Friday, we saw a big surge in the net worth of Jeff Bezos, and now quoting as the world's richest man. But the interesting data point, Pradeep, that I want to bring about is that in 2017, Jeff Bezos has added $28.5 billion to his net worth. Bill Gates has added about $6.3 billion. And the surprise package coming in, Mark Zuckerberg of Facebook, he has added nearly $25.5 billion. So keep an eye out on that one.
Thanks, Jayesh, for bringing us all those details. Well, moving ahead, bank recapitalization solves only the lenders' problems. Corporate India remains leveraged and does not have the balance sheet strength to borrow more or kickstart the capex cycle. That's the word from Rajiv Thakur of PPFAS Mutual Fund. Earlier today, in a conversation with Bloomberg Quint, he further raises concerns on the overcapacity of oil and gas players. Here's a slice of that conversation. Listen in.
Some would argue that we are maybe bottoming out on the economy front. Decisive measures have been taken for bank recap, and we should be crossing the NPA peak sometime soon. And again, credit offtake should happen. But I would rather wait for things to happen rather than pay up.
Why do you think it will take some time?
It could take time.
What, couple of quarters?
So what has been addressed is the PSU bank balance sheets as and when this happens. But the borrowers' balance sheets are still stressed. So who are the people who actually will borrow and kickstart the capex cycle? So that question is not answered yet.
So you know how PSU banks or banking in general is valued. You look at the adjusted book value. Now with so much of capital coming in, definitely that would boost the net worth, and also they'll be in a position to write off, take some tough decisions, which means the NPA number will also probably decline. So don't you think these PSU banks will be re-rated here on? What kind of upside is possible in your view?
Sure. So the re-rating has been pretty strong last week. People are factoring in the capital infusion. Now, while net worth will go up, the denominator in terms of number of equity shares will also go up. And the book value part of it will go away in terms of write-offs happening, or banks taking the tough decision to maybe sell off assets or take haircuts and move on in life in that sense. So it addresses the past holes or past problems that these banks were facing, and that's a really good thing. So not to undermine the really positive step, but for things to happen, even for these banks to grow further, there have to be reforms at the bank level. So in terms of customer orientation, or how do they address the market share losses that they've been seeing year on year. So those things have not been addressed yet. So maybe we'll see that coming down the line. But as of now, it only addresses the past problems.
Okay. You know, I would like to understand your call that you are sitting on 17-18% cash. It's a tough call to make. What's the thought behind it? What kind of correction do you really foresee? And at what level would you like to come out and buy? And what will you really buy?
Sure. So we get this asked this question a lot, that are you very bearish on the markets? Or so we say we are 83% bullish. It's not that we are sitting wholly in cash. So it's not about market timing or about looking at a particular index level. Essentially, we are looking at at companies on a bottom-up basis. So even in a scenario where markets are touching all-time highs, if one or two stocks correct, or we see earnings growth visibility and we find opportunities at attractive value, we could go out and deploy 5-10% pretty soon. So it's not something to do with overall market levels or having a target at this index level we'll enter. It could get deployed when we speak next.
Pradeep pointed out today morning fairly interesting trends that we're seeing in the commodity space. Anything out that in that basket, be it crude linked, be it global metals linked, that you would be keen to look at afresh?
So we are seeing bounce from the lows, but I don't think that the overcapacity problems have gone away. It's not that crude oil supplies are not there. So if price rise continues, you will see enough supply coming in. So we don't own any significant commodity companies in the portfolio, and we are not looking right now to add anything.
Okay, Now, moving on to companies that will come out with results. I think there are two companies slated to still come out with numbers from the index per se. Today, Tata Steel is one which is set to report its second quarter earnings. Likely to be an operationally strong quarter for the Indian steel major. Nikki Mirchandani is here with all that the street is estimating. Nikki?
Hi, so we're expecting a good set of numbers coming in from Tata Steel on consolidated basis. We're seeing a growth, we're expecting a growth of 23% on the top line front. EBITDA is expected to grow 76% at nearly 5,235 crore in this quarter as compared to nearly 2,970 crore in the base quarter. Margins are seen expanding at 16% as compared to 11% in the base quarter. Tata Steel is expected, the consolidated entity is expected to report a profit of nearly 1,663 crore against a loss of nearly 49 crore seen in the corresponding quarter of the previous year. Good domestic performance seen from Tata Steel India is expected to aid the bottom line growth of the company. To quickly run you down from what do we expect? Well, we expect the volumes are already reported. We are expected to see 15% growth on volume YOY for Indian steel business. It's going to be a 19% jump there due to ramp up in Kalinganagar plant. Strong volume growth and higher sales are expected to trickle down well in the top line performance of the company. Coking coal cost is also expected to decline sequentially for this company, and if you look at the improving realization and the lower input cost, that's expected to lead to an operational efficiency for the company. The company is expected to report a 60% growth, the Indian entity that I'm talking about, in terms of EBITDA per ton, which on the lower side we're expecting a range of around 11,828, and on the higher side the estimates are as much as 13,500. Factors that we'll be keenly looking out for will be coking coal cost, which is expected to decline sequentially, and also the EBITDA ton growth of European operations, which is expected to have a mild contraction on sequential basis.
All right, Nikki, we'll wait and watch for those all-important Tata Steel's number, but the telecom sector is also not expected to recover in the second quarter. In fact, we've got Bharti Infratel, which will be reporting its numbers. Let's go across to Shomit. Well, if I look at the stock, it was one of the top gainers today on Nifty. Are we expecting any sort of surprises?
Yes, Bharti Infratel might see growth, but then for the telecom service providers, it's not a good quarter. Now, the second quarter for telecom companies will be weak, not only because of the seasonality, but also because of higher tax rate under GST and the Jio's continued competitive pricing. Now, under GST, the tax rate was fixed at 18% versus 15% under service tax, and service provider could not pass through this hike in tax rate because of the competitive intensity that Jio brought in the second quarter. Now, in the second quarter, the two telecom service providers, that is Airtel and Idea, will see their average revenue per user decline for the fifth straight quarter. Airtel's ARPU is expected to come in at 146, while that of Idea at 135. Now, if you see company-wise, Bharti Airtel that is India's biggest telecom company, will see its consolidated net profit decline by more than 8%, but its African business will see growth due to its top-line growth and margin expansion coming in because of the cost control measures. Now, Idea Cellular, on the other hand, will see its financials worsen in the second quarter. EBITDA is expected to decline by more than 20% to 1,484 crore rupees in the second quarter, and in the second quarter again expected to post a loss, but this time the loss amount will be more than 1,000 crore. Now, this could be also the fourth consecutive quarter where the company will be posting a net loss. Now, Bharti Infratel, which is expected to come out with this number today, is a tower infrastructure company and will see a good growth in the second quarter. The revenue is expected to grow by 10%, EBITDA by 12%, as it will see benefit coming in from improvement of energy spreads, but on the other hand, net profit will decline by 5%. Now, the reason behind this decline is higher other income and higher tax expense in the second quarter. Now, for Infratel, tenancy ads are expected to moderate in the second quarter, but management outlook on the same will be a key thing to watch out for. Now, along with that, management commentary on share buyback plan, if any, given the high cash on their books, and also management commentary on potential mergers and acquisitions will be a key thing to watch out for.
Thanks for all these details. And from the pharma space, we are watching out for Dr. Reddy's Labs earnings that's coming tomorrow. Competition and weak pricing are likely to be some main concerns. Darshan Mehta, who tracks the counter closely, is standing by with street estimates. Darshan, what has been priced in?
See, we are seeing a 5% growth on the top line. Pharma as a sector is expected to be rather muted. So we are seeing a 5% growth on the top line. As far as the bottom line is concerned, we are seeing a degrowth of 8%, and margins will also come down by almost 200 basis points. So 16.2% versus the 18.6% that happened last time around. Basically, India is expected to be strong given the fact that there will be restocking post destocking that happened after GST. US is expected to be weak. We are seeing a 5% degrowth that could come in, not as much as what Lupin is expected, but yes, there is a 5% degrowth expected. Russia and Europe are expected to be to show strong growth now. Now, competition, pricing pressure is something that will impact the financials of the company. They have launched a couple of new products, and that will actually help offset the pricing pressure in the US markets. And there could be a potential out-licensing deal that they have done. If that happens, that could additionally boost the bottom line of the company. But overall, even for Dr. Reddy's, is expected to be rather muted.
Okay, thanks a lot for that. Before we, of course, wrap the show, let's take a check on how the commodity markets are faring as well. And quick perspective out there would be welcome. Remember, crude is doing rather well. The others maybe not so. Pradeep, interesting day of trade.
Yeah, so crude is holding on to the gains, actually $60.5 on Brent, and NYMEX roughly 54. If you also look at some other commodities, it's basically copper and aluminium, which is worth talking about. You look at copper is down 2.5%, aluminium down roughly 1% or so. So some profit booking also in gold and silver. So crude is the one that is holding on while metals are really weak and coming at some profit booking.
With that, it's a wrap. Navneet, sorry.
All right. No, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. It's goodbye from Pradeep, Neeraj and my side. Stay tuned for What Did You Miss?